This is a video chart presentation of CMG Holdings brought to you by IR Pro 2.0. CMG is a pink sheet company trading our ticker CMGO. You see this made a great move yesterday, up 31%. It's a lower volume play, only 12,000 shares traded. I took a quick look at the share structure of this company, and it's a relatively low floater. I think it was around 50 million shares in the float, so it does have the capacity of putting together larger volume days. But you can see it must be pretty tightly held because even on a high volume day, it only gets up near 350,000 shares. So it can move very easy on low volume pressure. But overall, a nice climb from down here around last August lows, touching 2 cents, now trading up in the area of 20 cents after hitting 35. I want to take a look at these indicators and see what they're telling us. So you got a nice bullish cross, histogram been riding on top of zero, and with that move yesterday, here comes a stronger turn. Was giving hints of that possibly happening by basically a flat line, finding a bottom, and then starting to put together a slight uptrend in the MACD. Now I just look for the continuation, trend back towards zero. Of course, the break of the money line, that's when positive things can happen. You can see right through here. When the MACD dipped below it, executed a bullish cross, trended back, broke through zero. There's where the big rise in price came. That's what you look for in this sort of scenario. Trend back towards zero, have some overall momentum generated. Then you look for the break of the money line to turn truly bullish. A little bit of a different look from the PPO, but again, the bullish cross, apparently finding a bottom and looking like it's going to try and turn and start trending back upward. ADX, that was in classic reversal position. We talk about this a lot of times in video charts. Negative DI up high, positive DI down low. With that price movement, here comes the reversal in direction. Of course, you look for the bullish cross of the positive DI breaking through the ADX. The trend was moving strong. Now it looks like it's going to break back through it. That's all indicative of a reversal in share price movement. MFIs all making their turn. You can see the 14 and 21, the red and gold lines, the longer MFIs, starting to trend upward. 7 much more susceptible to whipsaws. Quick turn just happened, making a higher low. What you want to see now is that break through this 50 marker and start trending on the upper side of 50, holding the upper end of the indicators very bullish. Trend lines are what you look for. And you can see the accumulation distribution is coming up on that trend line. You look for the break of it, establish this as a low, and start trending back upward. Accumulation distribution is right on that verge of trying to make that break, and that's something you pay attention to. Shaking money flow with a little bit of a turn yesterday, but again, importantly to note, basically trying to find a base, flatlined in its valleys, start to look for a trend back towards zero. When it breaks through zero, starts trending in the green, that's showing that buying pressure is dominating selling pressure. CCI, by definition, that break of 100 is the buy point. Lambert described that as a trading well outside of its average mean, and that is a bullish position. For CCI followers, it is a hold until it breaks back down through 100. And on a longer scale, you look for that trend line to hold. So if it goes up, breaks back down through it, maintains that trend line, and makes a turn, all very bullish things to happen. But the starting point is the break of 100 the first time around. That's indeed what's happening. Full stow, trending upward, making a break through 50, moving to the bullish side, overall developing a strong upward channel. It's a very bullish indication as well for the full stow. Tricks, of course, is a very slow, smooth indicator. You look for bullish crosses of the signal line, and now you look for the trend back towards zero. As far as overall trending and breaking through zero, you can see back through here, if you remember, that's where the big share price climb happened. So again, you always look for the bullish cross, trend back towards zero. Overall, a very good indicator of long-term movements. RSI can move very quickly because of the low volume. You still read it the same way. Look for key points. Breaking through 50, trending to the upper half of the indicator, all signs of bullish movement. From a support level, 12 cents held up. Even when it dipped below it right through here, pulled right back up, bounced off it here a few days before that, touched it at the end of last week, and promptly made a climb back up. Climbing back over the 200-day moving average is bullish. Getting these short-term moving averages tucked in underneath it is something I consider very important. You can see when rises occur, the first thing that happens is those short-term moving averages get tucked underneath it, and the price per share almost rides on top of it. So that's a very good indication of possible upward movement. You can see how strong they can be. Trending below it, price per share is having a difficult time moving through them, finds a bottom, makes a reversal, and now the moving averages are getting tucked in underneath it. As I mentioned, on top of the 200 day is a positive thing. Now you want to see it get over top of that 50-day. The most bullish of all stocks are trading over top of the 50 and the 200 day, with the 50 and 200 day trending uphill. Right now the 200 day is trending upward, and if this can move on top of the 50 day, we'll see it rotate and spin, and the chart can take on a completely bullish look. What I would look for first and foremost is that very bottom support to happen on any pullback, but I'd also look into this area a little bit more near term of 15 cents. This is going to define this as a bottom. Even on a pullback, you want to see it make a higher low. That was an area of resistance, and that would be a prime point for it on any pullback to start to establish a new uptrend. So I'd look for 15 cents to hold as a new support level. And I'd have my eye on 20 cents as the first resistance level. One, the 50-day moving average is coming into play. Of course, it's dynamic. It's going to continue downward a little bit more, but it ties in with some static resistance and price per share at 20 cents. So I think that that's going to be a key level for this chart to continue to move upward. Like I said, if it can't make it on the first pass, it wants to bump its head on it and pull back, look for a new support level to be established, while it tries to continue to gather upward momentum, and then try and take another run to break through 20 cents. If it can break through 20, of course, we look for volume to pick up. The more volume that comes into the break of resistance, the more powerful the concept of continued upward movement is. Resistance is relatively sporadic throughout this whole area. It's not going to meet anything what I would call significant resistance until up here in this area of 32 cents. Now, obviously, that's a huge move from where it is of greater than 50%, but that is going to be the next defined area of strong resistance. Of course, if it doesn't make it through that, you're just looking for it to take out 40 and make a new high. But the general concept behind technical analysis is defining support and resistance points and looking for trend shifts to happen. And this appears to be in the middle of a trend shift. And now the key is for the chart to identify itself as finding a true bottom and starting to trend upward. And that appears to be happening with the CMGO chart. So technical traders are going to have their eye on several key factors, and that will be volume, new support levels being established, and a run at these resistance levels. Overall, this chart does have bullish appeal because it can move on very low volume, and the indicators are certainly trying to turn bullish. So CMGO will be on my watch list from here forward to see where this goes. As always, annotated video chart is merely my interpretation. I'm not a financial consultant and strongly encourage you to do your own proper due diligence. Consult a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the IR Pro 2.0 website to view the full disclaimer disclosure and do not base any investment decisions on any material found on the website and/or this video chart. No person employed by IR Pro 2.0 is a registered investment advisor or licensed broker-dealer. Thank you for watching and trade smart.